Hello and welcome everyone to this recap of one of the most eventful weeks we have had in the past few months. I'm your host Swaraj, and along with me we have our technical research head, Mr. Matthew John. Now, Matthew is one of the most sought after personalities when it comes to market research, and he brings with him vast amounts of experience and knowledge. And he is one of the knowledge banks here at Almus. And there is a very specific reason why we have called Matthew today in our market recap session, majorly because geopolitics had a significant influence on the markets this week, even outweighing the potential rate hike discussions. So, welcome, Matthew. How are you doing?
Good, good. Thank you.
So, Matthew, we have been hearing a lot about this geopolitical tension between Ukraine and Russia, a lot of military actions, NATO involvement. But what is the underlying reason for these tensions?
The basic issue is Russia feels insecure, and with NATO expansion to the east. So NATO expansion to the east means all Soviet republics and their allies like Poland, Romania, and all coming to the NATO fold means that it is poised or it is a kind of an aggressive stance towards Russia. There is no other country that NATO has to be aligned or have to be a treaty organization to fight for. So this is against Russia. So Russia feels insecure, and Russia has been under sanctions for the last 20 years. One kind of one form of other or other. So what Russia has devised is some kind of a secondary lifeline for the financial systems, not depending upon UK and US banks. So they know how to get over sanctions. They have and their budget balance is around $50 or $45 of oil. Now it is at 90, 100. So that means that they have enough money to fund the war or aggression towards Ukraine. So Ukraine was part of Russia. Now that NATO has given the word that they will protect and all, and they are not able to protect, Russia has shown the world that NATO is not able to keep its word. They were not able to keep its word, keep their commitments in Afghanistan. Now in Ukraine. So Russia has, strategically from a tactical operation, they have strategically, geopolitically changed the whole landscape or the situation in Europe. They have emerged as from a low-lying power to a major power. So that is what they have attained. So this uh, the important thing is that whether America will put the nuclear option, which is an option to take Russia out of the SWIFT banking channel. If that happens, there are two ways. Russia will be affected definitely. Then countries who are buying commodities, already supply constraints are huge. So palladium is out of the market, platinum is out of the market, of course. The whole global supply chain will be again hit. So that will affect the Western countries also. It is not that Russia alone will. So they are not, pushing on to the nuclear option, which is to take Russia away from the SWIFT channel. So that means now, as of now, like Russia is the cakewalk for the Russian army. But they are not in a way invading the country. They are only doing some kind of a major surgical strike across military installations in Ukraine. That they take military installation, and their main demand is that to make Ukraine a neutral territory, so that it doesn't. There's a neutral territory between NATO bloc and the as well as the Russian side. So that is what they are trying to do, and geopolitically and strategically, they have attained all whatever they wanted to. The win for Russia, and it's a kind of a setback for the NATO alliance in the US. Yeah.
Right. So, a lot of insights there. And coming back to a specific point that you touched upon, that Russia has been under sanctions for quite some time. Now, we also know that Russia, as you said, is a big contributor to the palladium supply chains. So, do you think the fresh sanctions which US is talking about, is it possible that those countries might target these specific segments of the Russian economy?
This specific segments of Russian economy. The Russian economy, whatever they are producing is required. You need vanadium, you need tungsten, you need titanium. Without this, you cannot have any of the things that we are doing, even from a small, electronic item that we are using. all the chips would be requiring all this. So it becomes very, very difficult to, isolate and target specifically Russia unless you have all the supply chain or other facilities coming up in other countries. Now, Britain and US are trying to find alternative sources of energy. Till now, they were sleeping. So it becomes very difficult. You are energy dependent. Europe's energy is sourced from Russia. So to your question, so you cannot isolate Russia because Europe is dependent upon energy, and as we speak, around $800 million of trade is done with Russia every day, including natural gas, oil, and other vital metals. So as we speak, fighting in Ukraine, but the Ukrainian gas pipelines which supplies gas to Germany is live. There's still Germany is sourcing gas from Russia, and even the smallest they can do is cut Russia from the Black Sea, which has a small Suez Canal kind of an opening in the Strait of Bosphorus. Even that NATO cannot do. So Russia knows that the inadequacies of the NATO treaty organization and their dissensions between the members. So they are taken advantage of that, and strategically they are moved and they have moved all glory. What is not glorious, but at least for a time being, they look victorious. And sanctions may not work unless you take out Russia from the SWIFT banking channel. Then that would also mean that buyers of those commodities like India or China will be affected. And if China is up, again the supply chain constraints will again cause further inflationary problems.
Right. So that's a lot of great insights, also displaying the dependence of the world on the commodities being produced by Russia. A final question. So this week has been very volatile in terms of be it equities, fixed income, commodities, even currencies. So what's your take on what has happened this week, and what are you expecting for the week which is going to come in?
So there will be a lot of surprises. We would have a lot of surprises. For example, Putin said that he is not going to, do any kind of offensive military action in Ukraine. There will be a lot of surprises, and this is not the end of the story. Although the financial markets for them, the Ukraine thing is a very small economy, small thing, and Europe continues to buy oil from Russia. So it is not going to upset it. The biggest thing would be how the Fed speakers will position before their blackout that happens in the next few days. The Fed speakers won't be allowed to talk in the last 10 days before the FOMC. So most of them would like to have a a small hike. Some of them are arguing for that's the most important event. In the rate hike perspective, and with that, how much and what is the time frame in which they are going to reduce the balance sheet? Because if they are not going to reduce the balance sheet in a way, the yield curve will start inverting, which will again give a lot of other kind of volatility to the financial markets. They will have to somehow spin or communicate to the world that U.S. economy and the global economy is steadily growing, and their rate hikes are kind of catch up. So it will be very difficult to communicate it, but financial markets will have kind of swings. The swings we saw in dollar rupee, it went up and down and all that. But broadly, if you look at the dollar rupee from the last, I know you will the next question or your thoughts would be on dollar rupee and how it has hardly moved. It has been in a range for the last more broadly. If you look at the screen here, it's broadly between 73 and 75, 50, 76. And that's it. And whenever it comes to the minor overbought, oversold areas, it's a pure technical thing. They get bought and sold. Today also it went to the higher side. Now it's getting sold off. So it is a pure, play with 4 to 5, or maybe 3 to 4% of moves. So we've been rupee has been very stable. Although we will see that the sudden moments of 1 year all that happened in the currency markets are small moves. And it has been relatively stable, and it will continue to remain stable as the Fed keeps or position themselves with a stance of hiking rates in the coming year, and RBI is not in a position to hike rates. That means we will have an interest rate differential that is skewed against the rupee. That is one. Inflation is higher with oil and all that boiling because of Russia, Ukraine, and all other reasons. Iran oil supply is coming, but that is our, and even the US is supposed to release some SPR this week to cool down oil prices. But the point is that even they do it, the geopolitical situation is such that you will have oil, even if there will be swings, it will be about 85, 90, 100. That means that our current account deficit will slightly slip towards 3%. And our trade deficit is already high. It's above 15, means that it pressures the rupee. This is the blue line is the rupee, dollar rupee. And whenever it reaches $15 billion of trade deficit per month, what happens is that rupee will have a sudden burst of weakness. This time it didn't happen. The lag is possible. Higher trade deficit,
Matthew,
higher
sorry.
inflation.
Can you explain the chart again, because your voice just cut out in between?
You will edit it. See, so whenever whenever we have a trade deficit of more than $15 billion, hey, 1 second. The whenever the dollar rupee starts, whenever the trade deficit moves above $15 billion, what happens is that after a few months, the dollar rupee starts weakening. This is the weakening, 63 to 73. The blue line is the dollar rupee. So this time, what has happened is the trade deficit has slipped even above $20 billion. So now it is at 17, $18 billion. But that move from dollar rupee hasn't happened. So we have, with a lag due to inflationary on our economy, basically not maybe from at least from base materials and supplies and import inflation, plus oil prices being higher, plus geopolitical tensions and all that, and maybe political developments internally, elections and all that, and dollar rupee fighting a lag of all these deficits, and the technical picture, which looks like it is although stable, but can break out to the weaker side. So it has not broken, but there is a possibility that with all the pressures building up with Fed hikes and all that, the pressure will be building for rupee to start weakening in the months to come towards 77 and all. So that is a broad view. It may not happen immediately. Maybe we have an IPO, big IPO and all that will strengthen a bit. But broadly hold the range then, but then the eventual breakout should be on the weaker side.
Okay, now we know what to expect in the coming week. But this is something that we all need to keep in mind, that these are the views as of now, and there is also a weekend coming up which can have further developments. But thank you so much, Matthew, for providing such amazing insights. And I'll see you guys next week with the weekly with the weekly wrap up. Thank you.